Good afternoon, everyone. This is Sage live from the 𝐃𝐽𝐻 studios in Sydney, and you're watching the last show of the day, the last trade. Let us see how the Australian equity market performed today. The Australian shares were trading marginally lower during the final hour of the day's trade as the market sentiment were boosted after the central bank maintained the status quo in its latest policy announcement. The market staged recoveries after the Reserve Bank kept the cash rate target unchanged at 10 basis points and retained the bond yield target of 10 basis points. The Apex Bank has also decided to continue purchasing the government bonds after the completion of the current bond purchase program in early September. These purchases will be at the rate of $4 billion a week until at least mid-November, the central bank said in a statement. The S&P ASX 200 dropped 11.10 points or 0.15%, down to 7,303.90, pairing the early gains. And earlier today, the index opened higher and gained as much as 0.5% to hit an intraday high. The lingering concerns over the rising COVID-19 cases weighed on the market. However, in the past 24 hours, New South Wales has reported 18 new locally transmitted COVID-19 cases, while 2 new cases were recorded in Western Australia. Moving on now to the sectoral front. 8 of the 11 sectoral indices were trading in the red, and the healthcare sector was the top laggard with 1.35% loss. Among others, telecommunication services, information technology, consumer discretionary, industrials were the notable losers. And meanwhile, energy sector was the best performer on the ASX with 1.65% gains. The Aussie energy stocks gained momentum tracking oil prices after OPEC nations called off talks on output levels, which meant that no deal to boost production has been agreed upon. The information technology was trading in the red for the third consecutive session. In the tech space, the buy now, pay later giant Afterpay and network operator Megaport were among the top losers. And meanwhile, the ASX listed energy stocks continued gaining momentum for the third consecutive session. The index heavyweight Woodside Petroleum, Santos Oil Search, Origin Energy, Beach Energy and Ampol were trading in the green. Over to the mining sector now. Index heavyweights BHP Group, Rio Tinto and Fortescue Metals Group were trading higher owing to the firm iron ore prices. However, bucking the trend, the gold miners, De Grey Mining, Ramelius Resources, Chalice Mining were among the top losers. And in the banking sector, all the Australian Big Four lenders, Commonwealth Bank of Australia, ANZ Banking Group, Westpac Banking Corp and National Australia Bank were trading in the green ahead of the Reserve Bank policy announcement. Next, before we talk about the newsmaker stocks, let's have a quick look over the top gainers and losers of the day's trade so far. Beginning with the energy firm Oil Search Limited, who was the top percentage gainer on the ASX, rising 3.85% to $4.05 Australian. And some of the other top gainers were Whitehaven Coal, EML Payments, IGO, Pilbara Metals, or should I say Pilbara Minerals, and Incitec Pivot, as well as Beach Energy. On the flip side, gold miner Ramelius Resources was the worst performer on the ASX, falling 5% to $1.65 Australian. Appen, Polynovo, Clinuvel Pharmaceuticals, Orocobre and Regis Resources were among the notable losers. And now, before we look at the shares that are in the news today, it's time for a short break. Property by 𝐃𝐽𝐻. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on 𝐃𝐽𝐻 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐃𝐽𝐻. Welcome back, this is Sage and you're watching 𝐾𝐤𝐴 TV live from Sydney, and this is the last show of the day, the last trade. Let us now take a look at the shares that are in the news today. Shares of mineral processing services provider 𝐾𝐤𝐴 Limited jumped as much as 11.6%, reaching $3.09 Australian. This is a record high, and 𝐾𝐤𝐴 and Tarmac, a UK-based sustainable building materials and construction solutions business, have executed a pact to develop a calciner for lime production with carbon dioxide capture. 𝐾𝐤𝐴 said the pact outlines intent of parties to conduct feasibility and front-end engineering design studies on the project. Next up, shares of gold miner Ramelius Resources Limited fell as much as 6% to hit the two-month low of $1.64 Australian on missing gold production targets. The company has recorded full-year gold production of 272,109 ounces, below its guidance range, and the company stated its June quarter gold production of 61,840 ounces, also below guidance range of 65,000 ounces to 70,000 ounces. The company said that numerous rainfall events and COVID-19 lockdown restrictions hit production from End of May Production Centre, or the Edna May Production Centre in Western Australia. Mineral Resources shares rose 0.5% to $56.70 Australian after its wholly owned subsidiary Energy Resources Limited secured a drilling rig for conventional gas exploration. The exploration rig is for well Lockyer Deep 1, situated in the onshore Perth Basin and Western Australia. It is a highly prospective northern section of the Perth Basin, hosting several significant recent conventional gas discoveries. Next on the list, shares of Westpac Banking Corporation were trading marginally higher after the lender sold its New Zealand life insurance business for $373 million Australian dollars to Fidelity Life Assurance Company, a locally owned life insurer, and the bank has also signed a 15-year agreement for the distribution of life insurance products to Westpac's New Zealand customers. The deal is expected to complete by the end of 2021, subject to requisite approvals. The move is a part of the lender's strategy to simplify business and focus on core operations. The lender is also reportedly in talks with Japan's Dai-ichi Life, TAL and Resolution Life to sell its Australian life insurance business. The share price of Sydney Airport retreated over 1%, reaching $7.70 Australian after surging over 30% in the previous session, amid news that the company had received a $22 billion Australian dollar takeover bid from Infrastructure Consortium. The Sydney Kingsford Smith Airport operation said it had received an $8.25 Australian per share takeover bid from a consortium of infrastructure investors, including IFM Investors and Q Super. And now, before we look at the shares that are in the news today, it's time for a short break.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
We cover it all on our news segments.
Be on top of the latest news
with 𝐾𝐤𝐴 TV.
Welcome back, I am Sage and you're watching 𝐾𝐤𝐴 TV live from Sydney, and this is the last show of the day, the last trade. Shares of Abacus Property will be looked at a bit closer next. They traded down today, 0.6%, pairing the early losses after the Real Estate Investment Trust said it has purchased 5 assets worth of $160 million Australian dollars from Storage King, a self-storage group, and the portfolio of 5 assets provides more than 25,000 square metres of net lettable area located within the premium inner Sydney significant urban area. The acquisition will be funded from existing debt facilities and is expected to complete on the 3rd of August 2021. Also making the news, shares of Canaan Petroleum gained 1.8% to 29 cents Australian after the oil and gas exploration company said it has formed a joint venture to produce renewable diesel and other sustainable products. The company has formed a joint venture with the Frontier Impact Group, which is progressing a biorefinery business in Western Australia to produce renewable diesel and other highly valuable products. And as per the deal, both the companies will own a 50% equity stake each in the joint venture, with Canaan set to invest 2.6 million Australian dollars in seed capital to enable the first project to reach the financial close, which is expected by early 2022. Shares of SRG Global rose as much as 12% to 56 cents on strong earnings outlooks for financial year 2021. The construction contractor shared it expects the financial year 21 EBITDA to be at the top end of the previous outlook range of 45 to 47 million Australian dollars. And moving on, payment solution provider EML Payments gained as much as 6.5% to hit $3.78 Australian. And that was this morning. The stock has posted its biggest intraday percentage gains since the 21st of May 2021. And now let's take a look at the global markets performance, beginning with the Asian markets, who are trading mostly higher on Tuesday, barring China, driven by the robust US job data, which shrugged off the rate hike concerns. And Japan's Nikkei was trading 0.35% higher, while Taiwan's weighted index rose 0.11%. Singapore's Straits Times rallied over 1%, emerging as the top performer in the region. And India's BSE Sensex rose 0.1% in the opening trade. Bucking the trend, however, Hong Kong's Hang Seng was down 0.6%, and the New Zealand's benchmark S&P NZX 50 fell 0.35% as well. China's Shanghai Composite dropped 0.5%. Meanwhile, the global stock markets closed higher on Monday, with European stocks ending on the positive note after data showed that Eurozone business activity surged in June. Trading volumes, however, were subdued as markets in the US remained closed for an extended weekend on the eve of Independence Day. Thanks for joining us on our reports today. That's all for now in the last trade. And with our existing operations in Australia, New Zealand, UK and Canada, 𝐃 Media has launched its operations now in the US markets as well. Every day in our first show, the Global Market Updates, you can get the latest and important news of the US and the UK markets from the overnight happenings. So on that note, I'll see you tomorrow at 10 a.m. as close as possible to that time, live from Sydney. Sage signing off.